Good morning everyone and welcome to another RF Crypto video. Today's markets have gone down by a little bit, not a reason to panic. Yesterday the global crypto market cap was about 1.31 trillion. Today it has fallen by almost 2.3% and it's now standing at 1.28 trillion. The price of Bitcoin has fallen below the 30,000 level, but it is holding strongly. It hasn't fallen further down than 29,800. So despite the bears getting the best of the market, and despite Bitcoin going below its $30,000 support level, the bulls have gotten back into the action and pushed the prices a little bit up, stabilized it, and we are seeing higher highs now. Ethereum standing strongly at $2,000. It has gone down by 3%, but the bulls aren't allowing the price to go below $2,000, and it's holding quite well. Looking at the rest of the market, all we see is red, except for some green such as Litecoin, Tron, Unos SED Leo, and Monero. These coins obviously have their own token specific factors that are causing them to move in the opposite direction of the market. Maybe there are some positive developments in their ecosystem. Maybe there has been an increase in demand for these coins, therefore pushing up the prices while most of the market is in the red. We have seen that the price of Bitcoin has fallen below the $30,000 support level. However, it is trading very close to it. The next support level below 30,000 is about 27,500. However, it's nowhere close to it. And one positive trend that I'm seeing at the moment is that we are seeing higher lows. So the low here was at 27,000. The low here was at 28,500. The next low was at 29,100, 29.5, and now it's at 29.8. So it is a positive sign in the market. There is some consolidation going on. The volatility in the market between the ups and the downs are decreasing, and this means that the market is moving in a funnel shaped towards a single point. Hopefully it's a point which causes the prices to go back up. And we have seen this trend over and over again. Whenever the crypto market goes down, whenever Bitcoin goes down, the prices typically slowly start going up, and we start having one big explosion, and the price of Bitcoin might go over 31,500 to 35,000, maybe to 36,000, and so on. Obviously, this is wishful thinking. Things aren't easy at the moment, and we'll just have to wait and see how the markets react. There are some good news in the market, and hopefully this is enough to push the prices back up. So the South Korean legislature considers a new licensing system for crypto. So they are looking at revising their domestic crypto laws, and they want this industry to adopt a licensing system for exchanges and token issuers as a way of protecting investors. These new regulations are meant to mitigate insider trading, pump and dump schemes, and wash trading. And we know for a fact that when there is no regulation in place, it's havoc, and it's like the Wild Wild West. People were issuing coins left, right, and center. They were scamming people. There are a lot of pump and dump schemes where the issuers sold the coins to the public promising X, Y, and Z. They never kept those promises, but when the prices shot up because people started buying it, these owners dumped whatever was in the liquidity pool, leading to the prices to go down violently and causing thousands and millions of people to suffer massive losses. So in order to prevent things like this, and in order to prevent insider trading as well, because there has been a lot of insider trading in crypto where information has been spread from party to party, obviously influential people, and there might be an update to a crypto project that might cause its prices to pump up. And then we suddenly see all these influential people in the crypto space just racking up on those coins, and then when the prices go up, they make a massive profit. And obviously in the stock market, this is illegal, but in the crypto market, it's not yet. And in order to prevent this, the Financial Services Commission in South Korea wants to implement very strict regulations, and the penalties for complying with these regulations would be harsher than the current Capital Markets Act. And obviously this push for regulation and the implementation of a proper licensing system follows Terra's crash. And the founder, Do Kwon, he's South Korean. He might find himself called before the National Assembly to explain what happened, because South Korea has one of the strictest laws in terms of crypto, but it's also one of the easiest to do business in the space, which makes it the perfect place to open a crypto company. One of the recommended regulations could force coin issuers to submit a white paper to the Financial Services Commission about their project, which includes details about the company's officers, how it plans to use funds raised through an ICO, and what are the risks associated with the project. And this will sort of give FSC an overview and an insight of what the project is about, what the risks are, and then they can make a decision in order to protect investors on whether to allow the project to go ahead or decline the project from ever seeing the light of day just because it puts people at risk. And this is fantastic because we are tired of seeing so many meme coins and pump and dump coins just littered in the markets. And this type of regulation would force coin issuers to have a proper sort of dossier for their project, and all of those that were trying to scam people will be filtered out of the market. And also, I mean, not only are they speaking about crypto projects, but also stablecoins. It has been said that the South Korean government wants to put requirements on stablecoin issuer asset management that would apply to how they use collateral and how many coins an issuer can mint, which is very clever, and it will ensure that the stablecoins that are issued in South Korea are stable, robust, and backed by actual liquid reserves in order to prevent what happened with Terra. So on some Terra news, its legal team resigns in the wake of UST and Luna collapse. So General Counsel Mark Goldich, Chief Corporate Counsel Lawrence Florio, and Regulatory Counsel Noah Axler all left their positions shortly after Terra's algorithmic stablecoin UST collapsed last week. And they say that it is unclear why the attorneys resigned, but I think we can sort of postulate that it is because of the crashes. Maybe they gave recommendations to Do Kwon or the Terra executives in order to prevent this, and their words went to deaf ears. I mean, attorneys have an oath for doing what's in the best interest. Obviously, most of them aren't so innocent and aren't so pure. However, there are many attorneys that believe in doing the right thing. And in a lot of cases where attorneys resign, it's because the companies aren't doing the right thing. So it's just food for thought. I'm not saying that happened. I'm saying it's just a possibility. So Robinhood launches a new no transaction fee crypto wallet. They are launching a standalone Web 3.0 cryptocurrency wallet that itself, Robinhood, the company, will pay the blockchain network transaction fees for its customers without holding customer assets in custody. So this will be non-custodial wallets. They want to make it easier for everyone to hold their own keys and experience all opportunities that the financial system has to offer. And custodial wallets are basically those that the company holds the keys and the company holds the assets, and then if it's liquidated or the company goes bankrupt, all those assets also go with it. But with a non-custodial wallet, it grants customers full control of their cryptocurrency because the customers have access to their own wallet's private key, which is a 64-digit password, and when this is lost, it cannot be recovered. And it's a big responsibility, but most crypto users, especially veteran ones, prefer non-custodial wallets just because it gives them better control, just because it gives them better safety and security and peace of mind, in the sense that if a company gets bankrupt, their crypto is safe. So according to Kerabat, who is Robinhood's crypto chief technology officer, he said that the company plans to cover network fees for users by passing those fees to larger crypto liquidity providers who will compete to deliver improved prices in return for profit made on each transaction's spread difference. And this is very, very, very clever because it's similar to the payment for order flow model for stock trading. You see a lot of stock trading platforms that have zero fees, and this is how they make their profit, by the spread difference between each transaction. And the spread difference is so little that it doesn't actually make a difference for the customer, but it makes all the difference for the crypto liquidity providers because volume matters in this case, and the volume of transactions will be massive. Therefore, the profit potential, even though each transaction's profit potential is small, overall it will be large. So ever since its initial public offering in July 2021, Robinhood's share value has plummeted, falling more than 70% from $35 to almost $10. And I guess this is one of the reasons, or this may be the main reason, why they're trying to innovate, why they're trying to bring non-custodial wallets, fee-less transactions. We are at a spot where we have a lot of blockchain technology, we have a lot of crypto technology, so it's about who can give their customers the best service and who can give the customers their most efficient, cheapest, and easy to use service. And Robinhood is trying to get into this by offering no fees. So that's it for today's video. Thank you very much for watching. If you enjoyed the video, please consider leaving a like, hitting the subscribe button, and sharing this video with your friends and family. Invest wisely, and cheers.